the motion adopted on Wednesday, December 10th, 2025, the committee will commence consideration of Bill C-15, an act to implement certain provisions of the budget tabled in Parliament on November 4th, 2025. Given the number of officials that are appearing before the committee, the meeting is divided into two panels. The first hour will focus on tax-related measures, parts 1 to 4, and the second hour will focus on non-tax measures, part 5, divisions 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 22, 26, 20, 37, 38, and 45. With that, I would like to welcome our witnesses. Normally, I would introduce everybody, but there are a lot of you, and so in the interest of time, committee members have received a list of the witnesses, and so I will encourage you to look at that and to choose who you direct your question to. There are no opening statements, so we will proceed to the first round of questions, and I have Mr. Kelly as opening for 6 minutes.
Thank you. Thank you, Chair. Among the witnesses, I'm not certain who is best, but amongst yourselves, perhaps select who can answer questions about the infrastructure bank. Under Division 4, there is to be a $10 billion increase to its funding envelope. And so my first question is whether or not the infrastructure bank is on track to reach its target of dispersing $35 billion by 27-28. Okay, we've got a lot of officials here. We're here to do sections 1 to 4. Do we have someone that can speak about the infrastructure bank?
Right. Is that in, thank you for the question. Is that in part 4 or 5 of the bill?
I think it's in 4, but.
Is there anyone who is able to respond on the infrastructure bank? It's sorry, Mr. Kelly, it's actually part 5. So there'll be officials for the second hour who can do part 5.
All right. If we're going to discuss parts 1 to 4, then in response to in Annex 2 on the budget about the this is about the capital framework. Presented in Annex 2, there is a change to how the Department of Finance is going to determine what different categories expenditures fall into. So does the Department of Finance have a rubric or a chart for deciding which of the new spending categories different items will fall into?
Again, thank you for the question. It's a good question. We're quite a few officials, but we're here to talk about parts 4 to 1 of the bill. So, you know, we just want to be able to answer, you know, to give good answers to questions, and that's what we're in a position to do, is give good answers to those parts of the bill.
Is there anyone who can discuss Annex 2?
This is in the budget itself, which this act implements. So we're here talking about the implementation of the budget. One of the important notable items in the budget was the reclassification of expenditures. I'm wondering if I wonder if an official can give us some insight into how categories will be determined in the budget.
Thank you for the question. I think the best we can do is either bring that back and to be able to provide you a good answer to that, or perhaps it can be posed at a future meeting. But we'll certainly bring that back to our colleagues.
Right. Well, the budget itself contains sections 1 through 4 contain some tax reductions, some tax eliminations. The digital services tax, the underutilized housing tax. Can an official discuss how these tax eliminations will address the productivity crisis in Canada and how we might get to a more productive economy and a more effective taxation system that will stimulate investment, as has been described by the government? No? Removal of the digital services tax. Can somebody even talk about that then?
Sure. I think we're just, because you mentioned two measures. I think if you want, what I can respond to is certain tax measures that are aimed at encouraging productivity and growth, and there are probably three, and a number of the measures are in this bill. The first is what is referred to as the productivity super deduction, which is basically a series of accelerated depreciation measures. So they accelerate the rate at which firms can claim depreciation, which basically encourages investment. Basically broad-based, applied to most investment assets in the economy.
So do you have an expectation of how much investment that particular tax, since you're addressing that one, what is the expectation on investment activity as a consequence of this tax?
Yeah, so maybe I'll make three points on that. I mean, the first is in terms of the quantum for, again, the portions that are in this bill in terms of accelerating through the productivity super deduction. It's about 17 billion in reduction in taxes. Again, that's accelerated tax reductions. Eventually, those unwind, but in terms of the budget horizon, about 17 billion. That's affecting about 500,000 firms throughout the economy. And the budget sort of provided the impact that would have in terms of crowding in capital investment, and the estimate would generate economic output of up to 9 billion annually over the next 10 years. So that's for that.
So reduction of 17 billion in taxes received and 9 billion in tax in investment activity to the general economy.
Which generates 9 billion in output. Yeah.
Okay. Thank you, Mr. Kelly. That's time for now. Thank you, Mr. Baylor. We're going to go to Mr. Letao for 6 minutes, please.
Très bien, merci.
Thank you very much.
Bonjour.
Good afternoon. The sound is cutting in and out. This is the interpreter. The sound is cutting in and out.
C'était peut-être une nature un peu plus générale, mais avant d'y arriver, j'aimerais juste commencer pour mettre un peu
Non.
le budget tel que nous l'avons présenté au mois de novembre.
The budget as tabled in November, we had an economy that was stricken by commercial.
So we're in a trade war with our neighbors, who we thought was a reliable partner, but as it turns out, is an unreliable partner. Excuse me. So the impact of this on the Canadian economy was quite impactful and also affected investment. And this is what I'd like to address. I'd like to bring this up, namely measures to speed up investment in Canada. So in Canada, generally speaking, we have a productivity problem. Our productivity growth has been slow for many years. This is nothing new. Now, given the context of a trade war and real threats coming from the South to the Canadian economy, I'm just wondering what measures can accelerate investment and contribute to improving productivity. So, can any one of you tell us more about the economic context in which the budget was prepared? Or is this something you would rather not speak to? I can answer your question, and it'll follow up on my previous response. I'll answer your question from a taxation point of view. I feel the way you've described the context is appropriate, and that was the general approach we took. We kept on mind, actually, when we drew up the budget. And from a tax point of view, we wanted to, we kept in mind the One Big Beautiful Act of the U.S., which contained several measures to encourage investment, or contained measures to, it contained incentives for an accelerated investment. So we decided to take that approach as well. And those measures actually were put in the budget. If you want, I can mention 3 of them, which we've already talked about. So the accelerated investment credit, which will have an immediate effect, and we referred to this earlier. Second measure, several improvements were made for investment in research and experimental development. And lastly, I should mention clean energy measures, so tax credits for investment in clean energy, including clean electricity, biomass. So again, we have improved the tax credits for clean energy. And so I would say that these are the main tax measures that were introduced in the budget to address the challenges that you've just mentioned. And we also did that in response to what the U.S. administration did. Thank you. Similar measures to what was announced, so measures to speed up investment, so the accelerated depreciation has already been introduced in the past by different governments. But what's new this time, in the November 2025 budget, is that these measures apply to the entire economy. We're not focusing on specific sectors for the accelerated depreciation. So we've added measures to accelerate scientific research in clean tech, and we've also introduced tax credits to that effect. So this time, would you say that provincial corporations, especially those that generate electricity, such as is the case in Quebec, so do you think that those enterprises are eligible to those tax credits? I'm sorry, Mr. Littell, but your time is up. But perhaps Mr. Garon will continue with your line of questioning. Thank you very much, Madam Chair. And ladies and gentlemen, thank you for being here. I'm going to continue with the carbon tax credit. At the Bloc Québécois, we are against subsidies for fossil fuel industries. Regardless of what the government has said, tax credits for carbon and capture are hidden subsidies for this sector. We have a pro-fossil fuel government. So how much is this measure going to cost between now and 2035? To be clear, what's contained in the bill is extending something that's already in there. Originally, it was supposed to go until 2030, and rates will fall by half after that. So in the budget from 2030 to 2035, again, that timeline has been extended. The reason why it's not in the budget is because it's outside of the fiscal framework. I just wanted to explain that to you. So we're talking about $3 billion over 5 years. Well, as opposed to other people, perhaps, I've read the budget. So I'd like to know whether this tax credit is going to apply to recovery of oil. As the budget is written, no. Now, the department has said that this measure might benefit between 20 and 40 projects, but when extended, it can benefit 10 additional projects. Do you have a list of these projects for us parliamentarians? Well, we don't have a list per se. We've based those numbers on what we are perceiving as potential projects. But what is going to go ahead or not, well, we'll have to see. So you don't even have any potential projects. You could have. So you just threw out some numbers and you said it's 10? No. It's based on projects we are anticipating in going ahead. So you don't have a list? You said there are potential projects, but you can't tell us what they are. Is there a list? I apologize. I may have not expressed myself clearly. Just because there is a list, we're not saying all those projects are necessarily going to go ahead. Can we ask you to table that list? Because we'd like to know that the projects are out there. They might potentially go ahead. Can you table that list? Well, I'll take a look at it, and I'll see what I can come up with. Thank you. We'll follow up on that. I'd like to follow up on Mr. Letao's question on the tax credit for clean electricity. I'd like to know if any discussions have been undertaken with Hydro-Québec, and I want to know whether this tax credit will apply to any projects of Hydro-Québec, the construction of new dams, for instance. So will Hydro-Québec benefit from that tax credit? Generally speaking, the answer to that would be yes. So to answer that question and the previous one is that the point of this tax credit for investments in clean energy is that it would apply to Crown organizations. So the question is, will the tax credit apply or not, yes or no? If a project qualifies, yes. So will a hydroelectric dam, a new construction, will benefit from this tax credit? Answer, we expect that to be the case. Because generally speaking, Hydro-Québec's construction of new dams would be an investment in clean tech, so such a project should benefit from this tax credit. We have had discussions with Hydro-Québec. They participated in the consultations, and that is reflected in this measure. Do you have any idea of what amounts could be involved, what these projects are worth, and how they would benefit from the tax credit? I don't have those numbers with me, but there is a global number in the budget. So we expect what the tax credit would amount to, and part of that, of course, would go to Hydro-Québec. Do you have a breakdown by province? We can look at that. If we could follow up on that, Madam Chair, that would be great. Thank you very much. I'd like to talk about the digital services tax. We all know what happened there. Donald Trump threatened us. Mr. Carney did what he did until last week, is that he gave in. So I would like to know how much money will the government lose in tax revenue by abolishing this digital services tax? Thank you for the question. I will respond in English to ensure I answer clearly.
Revenues for the DST, which was an estimate, was $2.3 billion for 2024-25. That reflects 3 years' worth of revenues due to the nature of the history of that measure, and it would be $900 million in each subsequent year.
Okay. Puis, rapidement.
And quickly, Madam Chair, we know that our media are in crisis, they need help, and that this digital services tax would have helped media organizations. So will the government come up with something else to help them? Thank you, but that's all the time we have for this round. Thank you, Mr. Garron.
Just for 5 minutes, please.
Thank you, Chair. Thank you, officials, for being here. This is my first time coming to Finance Committee. I'm covering for a colleague who had a family emergency, so please go easy on me. When I look at the BIA and the tax measures that are there and implemented, just educate me a bit about how the Department of Finance works. Those tax measures, does your department provide advice to the government, model how those measures will affect the prices of the goods that they tax and inflation more generally?
So I maybe just in terms of in general how, and then this would apply to most tax measures that the Department of Finance does. So yes, as you suggest, the department would sort of provide analysis as to the expected impacts and implications and considerations surrounding tax measures. Now, depending on the measure, depending on the circumstances, depending on the extent of it, it may include certain data, certain assessments, or it may not.
Thank you. And then I guess I'm a bit confused as a new parliamentarian because we just had this budget. Now we're discussing a BIA, but kind of as we speak, the Prime Minister was announcing new GST credit measures to do with the price of groceries this morning. And so I'm wondering, is it peculiar that this was not included in the BIA? And did your department provide advice to the government about the effects that such a tax credit measure would have when the budget and the BIA were prepared just a couple months ago?
I think what we can say is for a measure to be in this Budget Implementation Act, it needs to have been either presented, proposed, or confirmed in Budget 2025, which took place in November. So any measure you see here was either announced in the budget or before that.
All right, but I guess I'm wondering if your department provided advice to the government about a GST credit to do with the price of groceries during those processes. So I'm not asking about what's in here. I'm asking about what's not in here, and whether your department has internal memos about that.
We're here to focus what's in here. That's our kind of purpose, to provide the best answers we can.
If your
on measures that are in the bill.
Thank you.
I mean,
So
I think what I can say generally is that we provide. I mean, as a tax policy branch, we provide advice to the Minister of Finance on tax measures generally.
So if you provided advice through internal memos to the government to do with this GST credit that was announced this morning, would you be able to tell me that you had? Would I be able to see those memos? And if not, why not?
We're here to discuss what's in the parts 1 through 4 of the bill. So I hope we can, continue to provide answers on that.
I would just encourage members to stick to the Budget Implementation Act, please.
I guess I'm left with the same question. I don't understand why that couldn't be answered, because I guess my concern with the Budget Implementation Act is there's a massive multi-billion-dollar spend that's been announced to do with tax policy, but it's not in the document that's before us. And I'm asking honestly, as a new parliamentarian, can someone explain to me why it isn't? And now that it has been announced, will your department be modeling the effects of this tax credit on inflation? And when will this committee be hearing about those models now that it is announced?
I guess when that measure, so it was announced today by the Prime Minister, when it's put forward in a bill and you consider it as parliamentarians, that's when we as officials can answer those questions, before you and your committee.
So it was announced today, but your department has not modeled it yet?
Yeah, Mr. Strauss, I would just ask that we stick to the Budget Implementation Act, because that's what officials are here to discuss today.
But I guess I'm of the view that this should be in the Budget Implementation Act, and I'm looking to understand why it isn't.
It's probably a question better posed to the minister than officials, so if you could stick to the Budget Implementation Act.
Okay, terrific. So there is an $80 billion deficit in the budget that was passed, the present act implements. Can you help me to understand what percentage of that new spend or that new deficit will be monetized by the Bank of Canada?
We're here to answer questions on parts 1 through 4 of the bill, and we'd be very pleased to do so.
So thank you. I think parts 1 through 4 of the bill include tax measures that create the $80 billion deficit that is before us. So I'm wondering if your department has modeled how that deficit, that is an outcome of this $80 billion deficit from the tax measures, has been modeled.
It would be colleagues of ours who deal sort of with, the fiscal, the macroeconomic effects of fiscal measures are taken into account.
5 minutes for this round. Thank you, Mr. Strauss. We're going to continue with Mr. McDonald for 5 minutes.
Good afternoon, Madam Chair, and good afternoon to the witnesses. Just want to start out with discussion on the lifetime capital gains exemption that's in Budget 2025, and I believe it's in Parts 1 to 4, so we'll be good there. I'm a representative from Atlantic Canada. The lifetime capital gains is an instrument that farmers, fishers, and small business have used extensively to allow for them to transition their businesses and have money for retirement. The 1.25 million increase from 1 million that is in the budget, how do you feel that will that keep increasing over time? I read that it's going to be indexed in 2026. Do you know the index level, and how will that increase over time?
Great. Thank you very much for the question. So you're right. I mean, so Budget 2024 proposed, and you have before you in C15 a proposal to increase the lifetime capital gains exemption limit. It would have been otherwise in 2024 just over $1 million, so to 1.25 million in 2024. Also in 2025, and you also rightly mentioned that 2026 is the first year of indexation. And we use basically the same indexation factor that we use for the rest of the tax system. It's based on the Consumer Price Index. And for 2026, that's 2%. So that's applied to the LCGE, just like it's applied to other tax parameters. So the result is now the LCGE in 2026 is 1.275 million. So it's gone up by 25,000. And basically, it'll continue to be indexed going forward, so next year and in future years by that same. So it'll depend on the Consumer Price Index and how that evolves, but it'll basically continue on that upward track in accordance with CPI.
Can you give any opinion on the level of capital gains exemption? Do you feel it's high enough for the industries that it's been applied to, or?
What I can say is that, it's the government thinks, I mean, the purpose of the measure is to basically, it increases incentives for entrepreneurship. So in some ways there's, some link to what my colleague more on the entrepreneurship side, but what my colleague Mr. Baylor was talking about investment. So it's, it's always with any level, a balancing act between, encouraging certain types of activity, collecting a certain amount of revenue. So, basically what the government is proposing here is that, that 1.275 million is in 2026 is appropriate level for and maybe the other thing I'd add is that that's per individual. So often you mentioned, farming businesses and in your riding. So often it can be, two spouses who own. So that can be multiplied if they're both owners. So there in that case, you could have 5.55 million. 2.55 million, not to exaggerate, in 2026 in joint LCG limits.
That's a good point, because I just went through a succession plan with 3 brothers, so it's an exemption of several $1 million. So it does fit, and it's a welcome news in the budget from Canadians that worked hard all their lives and they want to get something out of their business. Now, further along that vein of questioning, we've also extended the capital gains exemption for employee ownership trusts to include worker cooperatives. And in Atlantic Canada, we have a lot of that in the agricultural community. Can you elaborate on how the employee ownership trust works, and now that it will also cover the workers cooperative, just to schematics of it? Maybe a little bit on who's eligible, who's not eligible?
Just very briefly, we have 20 seconds
Okay.
left.
Oh, good.
Sure. I mean, the main idea with an employee ownership trust is that there would be an incentive, so up to $10 million tax-free on the capital gains realized when you sell a business that, in the case of an employee ownership trust, is going to be owned basically for the benefit of
Apologies, Mr. LeBlanc. I'm gonna
benefit of
have to
employees,
cut you
extended to
off.
worker co-ops.
Yeah,
Okay.
thank you very much. Thank you, Mr. McDonald. Monsieur Garon, on va continuer pour 2 minutes et demie.
Merci.
Thank you, Madam Chair. We'll continue in the same vein. So, media is in crisis, TV, radio, local radio. Many of them are shutting down. And with the end of the digital services tax, which was going to give them a dividend to be compensated for what is stolen from them by large streaming platforms, well, with the elimination of this digital services tax, it'll be even harder for them to survive. So the Bloc Québécois is defending these media, and the member for Montmorency Charlevoix in the House of Commons said the Bloc wanted to help those companies and held it against the Bloc. But again, our media enterprises would have benefited from the digital services tax. So my question is, how is the government going to compensate or help our media for the fact that the digital services tax is being done away with? Thank you for the question.
Clarify, the digital services tax, it's a tax, so the revenue from that would just go into the Consolidated Revenue Fund. It would not have been earmarked to give to certain media companies. There are other digital measures that are not taxes that I'm not here to talk about, but sometimes there's confusion between these different measures. So just to clarify, the digital services tax, it's just a tax.
Let me ask my question a different way. Are there any other measures in this budget to help our media organizations, to help them go through the crisis they're actually going through? Can you name just one of these measures?
I am here for the DST, so I would, if any of my colleagues are aware of other, and I think we're all the tax policy branch right now. So.
Can anyone tell me if there's one measure in the budget to help our media organizations? Perhaps we can ask our colleagues from the department to come back with an answer. Yes, that would be good. So the tax on empty apartments, this used to be the provincial jurisdiction. It's intrusion into provincial jurisdiction. Is this a bit like the luxury tax on private aircraft? Did the government realize it just didn't work, that it was losing money with this empty dwelling tax? Thank you for the question. Your time is up. We'll continue with Mr. Lefebvre for 5 minutes. Thank you very much, Madam Chair, and thank you to our guests who are with us today. Now, with regard to the digital services tax, can you tell us how much it costs to organize and implement this tax? How much did it cost to employ all these public servants to put together this tax? Thank you for the question.
So I don't have information available on a breakdown of how much it costs to put this together. When we work on files, oftentimes we have a lot of the same people working on multiple files at once. So that kind of data may not be available. Even when systems are built, sometimes the system will be administering more than one tax at the same time, and different components of both finance and the CRA do different functions. So that kind of number would be, I think, challenging to come up with.
Can you confirm that no monies were collected under this digital services tax?
In the bill, you'll see that there is a provision that provides for the refund of the funds that were remitted to the CRA. The announcement regarding the rescindment of the digital services tax came the day before the first payments were due. So some payments were made, and if this were to pass, those amounts would be refunded.
Donc, si les
So if those monies will be refunded, there will be no net revenue to the country.
OK. Tantôt, vous m'avez parlé.
A little earlier, you said that for 2023-2024, you talked about $2.3 billion, which will be lost, $900 million for subsequent years. François-Philippe Champagne, the Minister of National Revenue, had announced that he expected a free trade agreement to be signed with the U.S. and that this tax would be eliminated because we thought we would be able to make a deal with the U.S. And we were hoping to do so before July 21st, 2025. So $2.3 billion were left on the table for 2023, 2024, $900 million for the following years with nothing coming back. So now we have no guarantee we'll get anything out of negotiations because actually there are no negotiations at this point here. So how is the Department of Finance going to compensate for these losses or this lack of income?
I'm not sure this is a technical question relating to the repeal of the DST.
Understood. Monsieur Lefebvre, est-ce que tu peux...
Monsieur Lefebvre, pouvez-vous continuer, s'il vous plaît? Mr. Lefebvre, can you continue, please? Well, I have another question for you then. Today there was an announcement, and I just want to be clear that this is not relevant to the precise topic of today, but it's fairly relevant because an additional $3 billion in expenses will be added to the budget. How is the Department of Finance going to manage that? Because the budget came out 3 months ago. That's when it was tabled, and now we have an additional $3 billion in new expenditures. So how are you, as managers within the Department of Finance, going to how can you work with that when you don't know whether in a week a new suite of expenditures will be announced? So how do you manage or deal with all of these changes? Well, these are choices the government makes, and in the 2025 budget, the government laid out its fiscal framework for the announced measures. Which would include all the measures announced in the budget. That was our first fall budget. There was an economic statement. There will be an economic statement in the spring, and the government is going to reestablish a new fiscal framework and will include in that framework all measures announced since the tabling of the 2025 budget. Thank you very much, Mr. Lefebvre.
Sawatsky for 5 minutes.
Thank you, Madam Chair, and thank you to the witnesses for coming here today. I think really the broader context here is that a lot of the feedback that we get day to day is affordability. A lot of Canadians are struggling to pay their bills, pay the rent, and they've asked that the government do further supports to help them with that. One of which being the recent announcement, which was made today, of the Canada Groceries and Essentials benefit. I think will be a very welcome introduction. But one of the other things that was recently, in the budget here was that a lot of low-income Canadians currently miss out on essential supports like GST and HST credit, Canada Workers Benefits, the Canada Child Benefits, and others that they're entitled to because they just don't file taxes. The Budget 2025's automatic federal benefits initiative is expected to reach up to 5.5 million low-income Canadians by 2028. So I wanted to perhaps ask one of you, how will this automatic pre-filled tax return system improve benefit uptake and help ensure that Canadians, especially people who are unaware of their eligibility, receive those financial supports that they're entitled to?
Hi, thanks for the question. So you're right, the budget 2025 announced a couple of measures on automatic federal benefits. The predominant one being that the CRA will start to offer pre-filled returns for the 2026 tax year, so that'll be in spring 2027, to 1 million lower-income Canadians, and that will scale up to 5 million lower-income Canadians by 2028, for the 2028 tax year, so in spring 2029. So basically what this will be is that people will be able to go into their CRA My Account. The CRA will present them with a simplified version of their tax return that includes the information that they have on file for that individual. And then people will be able to modify certain fields as necessary and then submit directly with the CRA. And in that way, it'll be a hopefully quick assessment, and then the CRA will determine benefit entitlements upon that filing.
Thank you very much. That's fantastic. I'm sure a lot of people will be really looking forward to that. I know filing taxes causes a lot of headaches sometimes, and I think that will be a very welcome change. On that same note of affordability, people in my riding of New Westminster, Burnaby, Millardville have also reached out to me about inquiring about the Canada Disability Benefit, which increased financial well-being of low-income working age persons with disabilities. So to ensure that other federal supports are not reduced because of the receipt of the Canada Disability Benefits, how would the exemption of this benefit from the computation of income tax help?
Thank you for the question. So you've described the Canada Disability Benefit as an important measure for persons with disabilities. So what's in this bill is that under current law, Canada Disability Benefits would be treated in the same way as social assistance. And the way that social assistance is treated for tax purposes is that it's in and then it's out. It's in for the purposes of calculating income-tested benefits, like the Canada Child Benefit, but then it's taken out before tax. So people don't pay tax on social assistance or amounts that are considered assistance, but it does affect the calculation of their income-tested benefits. So what this measure is doing, kind of in the spirit of making sure that those receiving the Canada Disability Benefits can benefit from the full amount, is that it'll exempt the amounts completely. So they won't be included at all. It won't be this in and out. It just be they won't be included. They won't be in the first place, meaning that they won't affect the calculation of entitlement to income-tested benefits, like the Canada Child Benefit and several others.
Thank you. That's another great change, and I know that was a lot of feedback from having people to committee to really advocate for just the importance of the Canada Disability Benefit. And I think that's just a testament to how important committee is, how this dialogue is very constructive. So just kind of switching the topic a little bit, of course, another thing that this government is very focused on is productivity and increasing investments into the country, but also encouraging businesses to invest in themselves, so to speak. Can you explain how allowing businesses to immediately expense the cost of new machinery, technology, and equipment?
Apologies, Mr. Sawatsky, that's your time.
Okay.
We've concluded the speakers list for this section, but we have a couple more minutes, and so I'm just wondering if it's the will of the committee to give 2 more minutes to each party, or if you want to wrap this up and start on the next one. Sure? Yeah, do we have agreement there? Okay. All right, then, Mr. Halan, we'll start with you for 2 minutes.
Okay. Thanks to the officials for being here. The Canadian Energy Market Association brought forward concerns regarding the carbon tax rebate. Their gas station and wholesale food provider members purchase fuel with the consumer carbon tax, but after April the 1st, 2025, they couldn't charge customers for that same carbon tax. The association is asking for the carbon tax rebate for their members who paid the carbon tax upfront but were forbidden from collecting it subsequently. Will gas stations and wholesale fuel providers receive a carbon tax rebate?
So, Madam Chair, the legislative repeal of the federal fuel charge is currently at the Senate in the Bill C-4. I think that Bill C-4 received the approval of the House shortly before the break. So the matters that the member is raising here are not part of Bill C-15. They were part of C-4, and I'm not aware of any such rebate that have been either announced by the government in the budget or included in the C-15 bill that is before us. Thank you.
Okay. Is that it?
5 seconds, if you want them.
I mean, it's in part one, but okay, just quickly, Mr. Baylor, in response to Mr. Kelly, you said that the super productivity measure would generate $9 billion of economic activity. Is that correct?
Yes, I'm just quoting from the budget that basically they did simulations. Essentially, I mean, I can read it for you just so it's precise, but
okay, like if you can just confirm $9 billion.
Yeah, so $9 billion annually over the next 10 years in terms of economic output.
Thank you, Mr. Baylor. Thank you, Mr. Halan. Is it now, Monsieur? Is it Liberal or Bloc? Okay, Monsieur Garand, est-ce que tu veux 2 minutes?
Sure, on peut.
Well, I can't say no to that. I would like to know if small SMRs, small modular reactors that heat water to help produce oil from the oil fields, whether those SMRs are going to qualify for the clean energy tax credit. The tax credit includes all technologies, including nuclear. So you're saying nuclear technology is going to help extract the dirtiest oil in the world. Even at that, the federal government is going to apply a clean energy tax credit. Do you think we should change the name of that tax credit? Well, we're talking about the technology which is generating the activity. It's a clean technology. Thank you. Thank you, Mr. Garand. We'll continue with Mr. Letao for 2 minutes. Thank you.
Digital services tax. We just want to go back to that. So it was terminated, but do you have a view on how likely was it that Canada would have been able to implement such a tax? I mean, I think we were the only one, at least in the G7, trying to do such a thing, and we weren't quite sure if it was going to work or not. If you could just, yeah.
Thanks for the question. So there are other countries that have digital services taxes in place and are collecting money. For example, France and the UK and Spain. So, I mean, your question as to how, I'm not sure I fully understand your question as to whether or not it would be possible to implement.
Because even in Europe, France and the UK, of course, they're much smaller than what was proposed here. But even there, there are increasingly complex issues in applying those taxes to foreign-owned service providers.
Yeah, I don't think we have information about how the administration of the European DSTs is going. They are collecting money with their DSTs.
Still some time left. Marginal effective tax rate. In the budget, there's an interesting chart that indicates that Canada now, after all the changes that were made in this budget, will have one of the lowest MERT in the OECD area. Just would like if you could confirm that, and then I guess your group contributed to making that calculation.
Yeah, unfortunately, we will have to get it answered another time. Thank you, Mr. Militao. I hope that the committee will join me in thanking officials for coming and spending this hour with us. I do want to note that there were a number of questions that committee members had asked that the department and officials have endeavored to return to us on, and so we look forward to getting those responses. The analysts have made note of those questions, and so we will be following up on that. But again, thank you very much for your time and your work and being here with us today. And we are going to suspend while we change over to the next round of officials. So thank you. We will resume the meeting. I'm just going to say something kind of slightly different, but we just got some very unfortunate news that one of our former colleagues, Kirsty Duncan, has passed away. And I just wanted to take a moment to just reflect on her service and contribution. Many of us in this room had the opportunity to serve with her, and she was just an excellent person. So I'm sorry I'm letting you know, but anyways. There's so many people who pass through and that we get to work with, regardless of what side they're on, and we're fortunate to have gotten to know them. So she served for many years, and she was a good friend, I think, to people on all sides. So with that, the reminder that the second hour will focus on non-tax measures. Part 5, Divisions 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 22, 26, 37, 38, and 45. I would like to welcome our witnesses. Again, I'm not going to go through and read the entire list because there are many of you, and members are either invited to direct their questions to someone in particular, but I hope officials can determine which questions they are able to answer. With that, we are not having opening statements, so we will go straight to the speaking list, and we will begin with Mr. Kelly for 6 minutes.
Okay, thank you. And as the first one with the floor, on hearing that bit of sad news about a former colleague, let me extend on behalf of my caucus our best wishes, our thoughts for her many friends in your caucus, and our deepest condolences to her family in this time of grief. So that is very sad news that you had to report to us, and but I thank you for bringing it to our attention. If I may begin I'll begin with, and again, I'm having to flip back and forth to get the correct names of the right officials, but on Division 9, Consumer-Driven Banking, so this would be a question from Ms. Fraser. So how will this piece speed up the establishment of a proper consumer-driven banking industry? The lack of competition in Canada's finance sector is a productivity drag, and this is something that Conservatives have brought to the attention of the government over the years. There was a Conservative private member's bill to establish consumer-driven banking, and there's been much delay in getting us where we need to go. So if, I will give you a few minutes to talk about the technically what this will do, and will this so that we can be assured that commitments that were long made can be fulfilled on consumer-driven banking.
So thank you very much for the question. So the legislative pieces that are included in this bill include really the pieces that will get this framework going off the ground, and they are the accreditation, so that is the path to entry for entities wishing to participate in the system, and the common rules governing privacy, liability, and security, and privacy including consent. So as you mentioned, the government did in 2024 introduce the first part of this bill, which was included the scope. So that's setting out the types of accounts, types of data that will be included in the scope of the framework, as well as the technical standards elements, which are the instructions effectively for how entities will communicate with each other. So the pieces that are included in this bill are really the elements that are the active elements of the framework. So that is the path to entry and the rules under which entities will be required to comply to participate in the framework.
Okay. My former colleague Ryan Williams, even before 2024, had introduced legislation to try and establish this in Canada. If I can move to, I believe it's Division 13 on the equity threshold related to the capitalization of financial services companies and the minimum ceiling moving from $2 billion to $4 billion. I'd like some explanation about how, or an expectation of what firms will be affected by this. Are there believed to be a number of firms that will be captured by this that previously were not? How will this help increase competition and in the financial services sector?
Thank you for the question. I'm happy to respond.
Go ahead.
So the financial institution sector has a size-based ownership framework where companies, financial institutions, banks, insurers, as they grow larger, are subject to different ownership rules to reflect the level of risk and their level of importance in the economy. Those thresholds are periodically updated to reflect the growth of the economy, inflation, and the relative size of institutions in the sector. In this piece of legislation, the threshold, medium-sized threshold, so the threshold for firms that are growing through and would be required to float 35% of their voting shares on a stock exchange, is being moved from $2 billion to $4 billion. What that means is the number of smaller institutions that are currently wholly owned by a single shareholder would have, if they were approaching the $2 billion threshold, have greater flexibility in their ownership structure until they hit $4 billion, at which point they would be required to float 35% of their shares.
Okay, understood. Do you believe that how many of these kinds of firms exist? Is the old threshold preventing or making it more difficult or disincentivizing growth and innovation in the finance industry? And if so, what is the expected outcome for this change?
There are a number of banks and insurers that fall around or below the $2 billion threshold. It is difficult to say how quickly they would grow because that depends on their own business strategies. But they are below the $2 billion threshold and could potentially be affected.
A few moments left. Maybe why 4? Why not 10? I mean, we do have a separate problem, well related, and that's concentration of ownership within the
so the threshold
concentration of the number of players, at least in the sector.
The threshold is updated to reflect the growth in the economy and inflation. So the threshold was last updated in 2006. That's a number of years ago. And $2 billion to $4 billion would roughly reflect growth in the economy and inflation. I think you'd asked how many institutions would be affected, and it's on the order of 5 to 10. It depends on how quickly they grow and what their own strategies are.
5 to 10 companies that would not be forced now to divest. The current shareholders would be forced to divest.
Would fall below the $2 billion threshold and could potentially be going through that threshold depending on their own strategies. Yes.
All right, thank you.
Great, thank you, Mr. Kelly. Mr. Frederick-Skatos for 6 minutes, please.
Thank you very much, Madam Chair. Just at the outset, I've talked to, I think, almost all colleagues, but not everyone just yet. I'll be here in place of Mr. Turnbull over the next few weeks through the BIA and perhaps beyond that. I very much look forward to working with you, Madam Chair, and committee members, staff, and certainly public servants engaging with you today. Thank you very much for your contributions. My question relates to housing. Just a kind of question from 30,000 feet, if you like. Build Canada Homes. What will it do, and how is it different from CMHC? That's to whoever obviously wishes to take it.
Unfortunately, I have to say that no one here from the Department of Finance is here to speak about that section of the bill today. That's not one of the areas that we're covering. So unfortunately, we don't have the experts here. We can take your question and take it back with us.
Could you come back with an answer, please?
Yeah.
Yeah, thank you.
Okay, we are looking at Part 5, are we not? Okay. So Part 5 does include Build Canada Homes. We can...
So, sorry, we're missing someone? Okay. Well, if we could ask that you come back, but there's nobody here who would feel comfortable answering that question? No? Okay, we will ask for a response from the department, please.
No problem. perhaps we can talk about consumer banking then. Just tell us again, just in general terms, because most Canadians will perhaps have some familiarity with consumer banking, but what is the government trying to achieve by going down this path?
There are three core objectives for the consumer-driven banking framework. The first being economics, so competition, incenting competition and innovation, as your colleague spoke to. The second is security, and the third is consumer protection. So the goal here really is to allow Canadians to securely share their financial data, their financial information with accredited entities so that they can access new and innovative digital tools that allow them to improve their financial outcomes. So currently, to do this, people use a workaround that's called screen scraping, which requires them to share their online banking credentials to access these services. It's neither efficient for the entities that are offering these services nor secure for the Canadians that use them or the entities with whom they do their banking. And so this framework puts in place a pathway to accreditation. It puts in place oversight and rules governing entities that will facilitate the secure sharing of financial information through technology called API technology.
Okay, thank you very much. Can I ask also, how do we compare now with G7 countries, for example? Or if you want to look at the OECD, where are we at with consumer banking, and how would this change, alter that, or, I'll leave you to comment on it.
One of the last G7 countries to adopt this. The first mover jurisdictions would be the United Kingdom and Australia. And this, what's often known as open banking, exists throughout jurisdictions across the world, not just G7 and OECD countries. And so what this will do is bring us up to where those countries are. But I would also note the government has made a commitment to advancing payment initiation or right access through a second phase, and that commitment was in the budget to bring forward legislative amendments by mid-2027 to bring about that second phase. That would bring us up to par with some of our G7 colleagues, and in fact put us ahead of some of our other G7 colleagues, and as well colleagues throughout the world that have not, or jurisdictions throughout the world that have not moved on the right access or payment initiation aspects of this.
Thank you very much, Ms. Fraser. So in the end, we basically have a policy here that will make it easier for the everyday person
to securely and efficiently share their financial data, to access services that will allow them to improve their financial outcomes.
Okay, thank you very much. Again, general questions is what I'll be posing, at least at this first meeting. On the Red Tape Reduction Act, I wanted to ask that. Again, what exactly is the government moving with here? What is the intent, and how will it work?
So I don't know that we have anyone here from the Department of Finance that can speak to that today. Certainly, again, we can take that back, that question back, and come back to you with an answer.
That's fine. Madam Chair, how much time?
1 minute, 40 seconds.
40 seconds. Okay. You did mention, Ms. Fraser, on consumer banking. You talked about security aspects, or at least you alluded to it. Could you go into that again, expand on that? What exactly is being done to ensure security, or at least as much security as one can hope for?
Legislation sets out both requirements that entities seeking accreditation or participation in the framework will be required to meet, that they will be required to meet certain standards. Those are to be set out in regulation. The specific details of those will be set out in regulation. And the
Thank you, Ms. Fraser. Thank you, Mr. Fragiskatos. That is time. Monsieur Garon, vous avez 6 minutes.
Présidente.
Thank you, Madam Chair. I would like to talk about the high-speed train. Modern legislation on expropriation came after the horrible expropriations around Mirabel when the airport was built. And the federal government still has not apologized for those expropriations. Sections 9 and 10 of the Expropriation Act are suspended in the budget, and there would be no public consultations with regard to expropriation. So Alto, the corporation in charge of the high-speed train, has not behaved well. It has. I just found out that this rail line would go through my riding and would hold 3 half days of consultations. And not give people enough time to prepare for these consultations. So can anyone here tell me how suspending these 2 articles will not lead to abusive behavior on the part of the federal government in my riding, which has already historically been hard hit by expropriations?
I understand that's probably more of a transport question.
La section 5, Madame la Présidente.
We're talking about Article 5, Section 5. Yes, I see that no one seems to be able to answer. Is it necessary for Alto to tell people, we will expropriate you and you will not be able to participate in public consultations, knowing that today Alto's behavior is unacceptable for people in my riding and is a symbol of expropriation? I don't see anyone here who can answer that question, but officials from the Department of Transport will come next week. The legislation is being amended, and it will allow people to be expropriated via email. So in Quebec, you need to send someone a letter by recommended mail to say that their rent is going to go up. But now, these people can be expropriated by email. So is this appropriate? What is the technical reason for this? Mr. Garon, I don't think officials here today can answer that question. Madam Chair, Section 5 of the bill is contained here is relevant to today's meeting. I'm not saying you can't ask any questions or that question, but I don't know if anyone here can answer that question. It's deplorable, Madam Chair. I have a question on the Red Tape Reduction Act. The government is going to allow the executive to suspend any law or regulation which stands in the way of innovation. We've all read this in the news. I'm just wondering whether this provision, following the signing of a free trade agreement, whether it could be used to suspend parts of supply management if innovation is used as a pretext in that situation. Is that possible? Can anyone of the here answer that question? Can you perhaps go back to finance and get us an answer to that question? How much time do I have left, Madam Chair? 2.5 minutes. Bill C-15 threatens essential services in Quebec's public libraries because it's going to allow Canada Post to set its own rates without parliamentary supervision. We've spoken with some public libraries in Quebec, and they said it might prevent them from sending publications in Braille for the blind. I'm just wondering whether these specific cases were taken into account by the department. Can you provide me with questions to which you have answers? The officials here today are from the Department of Finance to speak to legislative changes or new legislation with regard to the authority of the Minister of Finance. So some of the questions you've asked fall under departments, under different ministers. So perhaps you can ask those questions to the officials of those other departments. I feel we're losing our time here, Madam Chair, but we're used to that. 1 minute. So the Stablecoin Act, can anyone talk about that? Yes. Please mark this date in your calendar, Madam Chair. So are we talking about a currency? What are we talking about here? What's the jurisdiction? I don't even have an answer to that question. So is a stable coin a currency? Is it a legal currency in our country? What are we talking about here from a legal point of view? I can start answering that question, and perhaps my colleague Gloria Wong can complete my answer. So this legislation, this bill, does not define stable coins as being a currency or having any monetary value. We are recognizing that it might be a bit of both or none of the two. Stable coins are active cryptocurrencies whose value is backed onto a currency. So we're talking about federal jurisdiction here. Please let the witness answer the question.
Mr. Strauss for 5 minutes.
Thank you, Chair. So I was dismayed to hear that we wouldn't be talking about Build Canada Homes at all, but I am curious. I have a technical question in general about how the Department of Finance works. I'm a new parliamentarian that does pertain to that section, but as I guess some of you are generalists, I wonder if you could just explain to me. There's the $11.5 billion in the Build Canada Homes Act in what was it, Part 5 of the BIA. Is that money dispersed yet, or is some part of that money dispersed, or when will that money be dispersed? Like, is that money waiting on the BIA to be passed, or is money already flowing? Like, where is the money?
Is there anyone who's able to provide an answer?
Not at all. Okay.
Okay. Can you? Yeah.
I'm just interested. I'm just trying to figure out how the department works. It's a good faith question, so I would appreciate the answer to be tabled. I guess so that we are able to ask questions about stablecoin today. Just in general, what is the goal of the Stablecoin Act? Like, what are we trying to prevent? What are we trying to accomplish with this act?
Thank you for the question. So the goal of this measure is to provide a regulated space for issuers to be able to issue stable coins with certainty. So prior to this, there is no comprehensive regulation in Canada to regulate the issuance of stable coins that flows across interprovincial and international borders. So the goal of this act is to provide certainty for issuers who want to do that. And ultimately, this would support innovation and people's confidence in this instrument and use this in digital payments.
Can you tell me how? Thank you for that. Can you tell me how is that possible? So if I make a cryptocurrency and I call it Matcoin and I say its value is supposed to be $1 and people are trading it online, how does the government of Canada even become aware that this happens? And then if there's a rug pull, I would never do this, but if Matcoin goes to zero, how does the government of Canada step in if I'm a mathematician in my basement in California?
So this framework requires stablecoin issuers to register with the Bank of Canada. So there will be so issuers would have to submit an application to the Bank of Canada to let them know that they are issuing a stablecoin that flows across international borders. And in terms of how we ensure that the value of the stablecoin stay the way it is. The proposed measure has requirements for reserve backing. So, for example, for an issuer that issues, for example, a stablecoin that claims to worth 1 loonie, they are required to put a loonie's worth of liquid asset as reserve, so that when the holder of the stablecoin wants the money back, they can have confidence that they can have their loonie back.
But if I'm operating in California and I make a stable coin and Canadians are buying it online, if I choose not to register with the government of Canada, how is that? I don't understand how the long arm of the law comes after me. It's a digital asset.
So that's a great question, and that is something that we are working with the Bank of Canada as a regulator to ensure that we could implement the framework effectively. And with respect to foreign
working
issues.
with, so I mean, but I guess I'm concerned that it's just impossible. If I create a digital asset in Moldova, you can work with the government of Canada and the Bank of Canada all you want. I don't understand how you ever, like, it seems like the act is seeking to regulate something that is unregulatable.
So if I may, so there's another perspective to this. So for many of the issuers that want to sell their stablecoins to Canadians, they're actually looking to be regulated under the federal framework because it provides them with legitimacy. So that is the way to provide their users with the confidence that their stablecoin is safe, and so people can use it with confidence.
Banks in Canada, a Canadian citizen. I'm just looking at the definition of stablecoin, a digital asset that is intended or designed to maintain a stable value relative to some fiat currency. Why would I, as a consumer, ever be interested in buying a stablecoin with a value of 1 loonie rather than having a 1 loonie in my digital bank deposit? Like, isn't that a digital store of value? Like, there is no loonie in existence when the RBC has my bank account. If there's 1 loonie in my bank account, that loonie doesn't actually exist. It's a digital asset, is it not? Like, how's this different?
Yes, so it gets to the potential use cases of fiat-backed stablecoins. So you're right. So right now, for many Canadians, stablecoins are not something that they use day in and day out. But stablecoins are gaining popularity in the use of international remittances. So, for example,
apologies, Ms. Wong,
cases.
that is time. Thank you, Mr. Strauss. We're going to continue with Mr. Letao for 5 minutes, please.
Thank you very much, Madam Speaker. So let's continue, because that's exactly where I wanted to go. Stablecoins, and why are we doing this? So please continue. You were saying in terms of remittances that's one of the more interesting outlets for stablecoins.
So that's one of the use cases around the world that's gaining popularity because, as you may be aware, right now, if somebody wants to send international cross-border transfer to another country, it takes a very long time. So stablecoins have this potential to allow for real-time settlement, and it's more easily transfer across borders. So that's one of the use cases as payment that is being that's gaining popularity these days.
I understand correctly, then if you're, if you're a Canadian company or business that is thinking of issuing and offering stable coins to the Canadian public, you have to register. If you're not registered, then technically you cannot offer that product to the population. It's just not allowed. And then if consumers do buy that in the parallel market, then they're not going to get any protection from the authorities. So the first step is to make sure that the providers register, and then once they are registered, then they can offer the product. There's the 1-to-1 ratio of real assets behind this issue. And if I understand correctly, the great advantage is the speed of execution of transactions. So you can make transfers, you can do it very, very quickly, while with more conventional payment systems, it can take a while. And then there's all the issue of the float. Where is the money? The money leaves your account, but doesn't get to the other account before a long time. And in the meantime, somebody is making some money. Okay, so stablecoins, I see the interest and the usefulness. Can you tell us, of course, first you have to pass this bill, but how far are we, the government, into this process of moving ahead with this product? I mean, first you need the legislation, but have you engaged with the Bank of Canada to set up the parameters for the registration process? I mean, how is that work going?
Thank you for the question. So as you may be aware, the current legislation is relatively high level. So the key will be to develop regulations for the associate legislation. So the department is ready to move as soon as the bill receives royal assent.
So, yeah, as soon as we get royal assent, there's a number of things that we can do, and that would be one of them. Still some time left, I hope. Combien? 2 minutes, mon Dieu, faut aller vite.
2 minutes, I'll be quick.
Consumer banking. One of the measures in the budget is, if perhaps you could explain it more clearly than what I can, is to make sure that when consumers, often elderly people, deposit a check in their checking account, sometimes there's a hold. Funds are kept on hold because you have to wait for the check to clear. And if I understand correctly, there are some measures in the budget that will diminish the amount of funds that will be kept on hold until the check clears. Am I interpreting it correctly?
Yes, that's right. So there's one main thing in the BIA, and that is to increase the amount of available funds. So typically when a consumer deposits a check at a bank, they have immediate access to $100, and the rest will be held for, there's a few different time periods, but will be held for several days. And so what the BIA is proposing here is to increase that first available amount to $150.
It's a quick question. Why do we need legislative change to do that? Couldn't the Department of Finance just tell the banks to do that?
Regulation is another option.
Okay.
And I would note as well that the budget also spoke to the plan to develop some regulations to decrease the hold period.
Okay. All right. Merci.
Okay, merci, Monsieur Letao.
Thank you, Mr. Lato. Mr. Garon. Thank you, Madam Chair. First, with regard to my previous customs, I'm not going to raise a point of order, but can we follow up with the department? Because I'd like to get the answers. Thank you, Madam Chair. So I'm on Division 17, the Canadian Deposit Insurance Corporation, and the federal legislation says that the recipient of data has to provide consent, but in Quebec, under Bill 25, which applies to Desjardins must obtain consent from its clients first. So it seems that in this case, there's an opposite effect that co-ops under federal legislation will be treated differently than Desjardins in Quebec. I just want to make sure that these two different pieces of legislation eventually can be made to align.
I think the core piece of information here is that it's the consumer that's initiating that transaction, right? So the consumer is dealing with one entity where they're being asked to give their consent to receive information from the other entity in order to provide a service or product.
Yes, I understand the reasoning, but the fact remains that Quebec, a year and a half ago, passed legislation treating with the same issue which applies to Desjardins, which is the largest banking co-op in Canada and the largest financial institution in Quebec. So I'm wondering whether there have been discussions or conversations to make sure that this misalignment will be ironed out.
In discussions with the provinces, I have to be frank that we haven't had a conversation about that specific issue. It has not been raised with me that there is a misalignment. We've been working throughout, I would say, the last several years with provincial representatives to ensure that there isn't misalignment.
I'm not talking about the other provinces. I'm talking about Desjardins because it's very particular. Sure, you have you studied Bill 25. That was part of your homework.
The provincial representatives from the province of Quebec.
Have you come up with solutions to make sure that the system which is applied at Desjardins and which has been modernized, whether there will not be too much discrepancy between that and other co-ops?
And
unfortunately, we've run out of time for this round, but merci, Monsieur Garon. On va continuer avec Monsieur.
Thank you, Mr. Garon. We'll continue with Monsieur Lefebvre for 5 minutes. Thank you, Madam Chair. And I would like to follow up on what my colleague said to wish you, Madam Chair, and the entire Liberal family and all parliamentarians for the passing of our colleague. Throughout politics, you develop friendships over the years across party lines. So our deepest condolences to the Liberal family. Now, Section 16, banking and fraud. will the change under Section 16 force telecoms to put an end to any fraud happening in real time?
The short answer is that this Budget Implementation Act proposes several elements. One is around policies and procedures, and so we are enumerating several issues that banks would need to have policies and procedures around, as well as a potential to prescribe through regulation some additional policies and procedures.
Well, will direction be given to ensure that that actually is implemented? Is that the objective?
Policies and procedures? Well, in the Bank Act, it is fairly typical for there to be requirements around policies and procedures. One of the benefits of having policies and procedures is that it creates a more rigorous system within the bank to address issues, as well as if the bank does not follow their policies and procedures, then customers can address that through an external complaints process. In the absence of policies and procedures, it is relatively more difficult to go that avenue of seeking some sort of remediation or rectification of the issue without having the policies and procedures.
Merci. Vous savez, Madame la...
Thank you. Madam Chair, today there is so much fraud against seniors, and we want mechanisms to stop any transaction which would defraud a senior. And we also need to impose sanctions and punish the people who are defrauding our seniors. We have to reassure our seniors that any fraudster will be punished. Is this part of the direction that you currently are working with?
Is within the Budget Implementation Act, but I would note that Budget 25 also announced the development of a national anti-fraud strategy, and that will be a multi-sectoral strategy as well, and that is something that is under development as we speak.
Merci, Madame.
Thank you, Madam Chair. Division 38. Ability to power, the ability to borrow. The amount has been increased significantly. When was the last time that amount was increased? Thank you for the question. We've increased that limit, or rather, the last time it was increased was in the spring of 2024. And on average, how frequently does the borrowing ability increase? Normally, it happens every 3 years. It depends on the circumstances. So normally, it's every 3 years. But now we're increasing that borrowing ability every 18 months. We've gone from a 25-26 deficit of $78 billion. Next year, it's projected to be $65 billion. The year after that, $64 billion, 28-29, $58 billion, 29-30, $57 billion for a total of $321 billion. Well, debt servicing fees for 25-26, over $5 billion. That's more than GST revenues across the country. Money's being printed. The debt is going up. How do you see the progression in the growth of the debt? Do you think we're going to hit the wall at some point? When do you think we're going to go back to a balanced budget?
To continue with 5 minutes for Mr. Fragiskatos.
Thank you, Madam Chair. I'll be asking about Part 5, Division 44, the National School Food Program Act. Are officials here okay to answer that? No. Okay. We'll have to return to that, Madam Chair, as you know very well. That is a really important, a critical issue, I think, for all parliamentarians in a difficult time. There's a health measure that I wanted to point to. Just give me a moment. Just had it here. Almost there. This is now Division 25 in Part 5, the Human Pathogens and Toxins Act. Admittedly, perhaps an obscure area, but I think as far as healthcare is concerned and lessons from the pandemic, I did want to put it forward as a question. But I'm not sensing that we have someone here to look at that either. Okay.
Just for clarity, the officials that are here are from the Department of Finance, and so they can answer questions related to matters that are the Department of Finance's purview.
Okay. Take it as a compliment. I consider the Department of Finance to have purview over everything then. We'll go back to consumer banking then. Where are we left in terms of the path forward, Ms. Fraser? This, you were saying before in the back and forth that we had, this would put us, I think you said, at the very least on par with what other G7 countries have pursued? Yes. Okay. Is there gaps remaining? Are we completely up to date? Particularly, we were just talking about security. Is there lingering issues that need to be addressed still, or?
Yeah, so certainly, I guess the benefit of being a fast follower is that we've had the opportunity to look at what other jurisdictions have done, particularly with respect to security. So I feel fairly confident in saying that the practices or aspects that are outlined in the legislation are aligned with our colleagues who have open banking or consumer-driven banking frameworks in place. I think it's an interesting question because when you look across jurisdictions that have open banking, you typically have what we would say like broad but not very deep. So you may have, like in Canada, where we would have a number of types of accounts ranging from almost anything you can think of, a type of banking account that you would have. But in the first phase, we will have read-only, so that's not a very deep framework. And then in other jurisdictions, you'll have a much narrower scope in terms of just having checking or savings accounts, but more depth in terms of the functionality, so the ability to initiate a payment, for example. But as I noted, the government is committed to introducing legislation that would allow or would facilitate, I guess, the introduction of the second phase of open banking that would allow action initiation or right access, which again would put us on par and or ahead of our colleagues in other jurisdictions with open banking systems.
To that?
Relating to?
Bank of Canada?
I mean, the oversight and administration has been transferred to the Bank of Canada. That's what's contained in the legislation. That was done with a view to, an efficient and expedited process to implementation. It's also, logical from the perspective that the government is already overseeing, the bank is already overseeing the RPAA, which deals with payment providers, payment service providers, and the government has announced its intention, obviously, again, to move forward with a payment-enabled system of consumer-driven banking. So from an efficiency and a logical sort of alignment perspective, that's why that decision was made to transfer to the Bank of Canada. There's also a question of efficiency for the entities, and so from a perspective of talking about competition, having both frameworks where there will be a lot of similarities in terms of the participants being overseen by the same entity brings a lot of efficiencies in terms of the ability to get these entities into the various frameworks that they would be participating in.
Okay. Thank you very much.
Yeah. Thank you, Mr. Fragiskatos. That concludes your time. Colleagues, we have gone through the speakers list for this round, but we still have a bit of time left. Would we like to do another round, 3 minutes each? Sure. Okay. That being said, is there someone from the Conservatives who would like to go? Okay. Yeah, Mr. Strauss for 3 minutes, and then.
Thank you, Chair. So I'm still really interested in the thinking behind the Stablecoin Act. So by my limited reading of the Act, if I said, my name's Matt, I want to issue Matt coin, everyone at this table give me $1,000, I will keep it in a safe. That safe is, the location of the safe is secret. Would I then apply to the Bank of Canada to get the imprimatur of the bank that now I'm a regulated stablecoin under this Act?
I'm indicating that the location of the reserve assets will be something that that may or may I guess it will be something that will be determined in regulation. So currently the regulations require say issuers to hold assets at least on a one-to-one basis. But there is regulation-making power in the legislation for the government to prescribe, how those assets will be held. So, and also the issuer will be subject to disclosure requirements. So, so there will be a level of transparency that an issuer will be required to provide in order for the stablecoin to be in compliance of the Act.
And so you are not at this time able to tell me what the location of the assets might have to be? Like, is it, I guess I'm curious, is it possible that I can say it's gold bars in Switzerland, or will it have to be deposits at an existing Canadian bank?
Yes, so there is a desire, I guess looking at international frameworks, assets are usually required to be held in highly liquid high-quality liquid assets simply to facilitate redemption, because the Act also requires timely redemption on the part of issuers. And in order to secure the one-to-one peg, it would be a lot more risky for issuers to put assets or the backing assets in investment that are not as liquid or as easily redeemed or liquidated. So that's why. That is one objective of the framework, and the regulation will provide further detail to ensure that issuers are actually able to liquidate the reserve assets on demand.
My understanding is that there's already hundreds of billions of dollars in stable coins. I understand that a large part of that market is a stablecoin called Tether. I can't recall the name of the kind of second one, but are they currently regulated, and if so, by whom? And do you anticipate that they would be applying for regulation with the Bank of Canada?
So our understanding is Circle. They have sought, or they are either seeking or have sought to file a prospectus under the provincial securities law, because currently the CSA, the Canadian Securities Administrator, has issued interim guidance, I guess, detailing what's required for stable coins to be listed on a crypto trading platform.
Okay. If I purchase a stable coin that eventually goes through this application process and then has the imprimatur of the Bank of Canada on it, is it your intention or the intention of this Act that my holdings will be insured the way my bank deposits are?
So the Act actually makes it clear that stable coins are not subject to CDIC insurance.
Okay, thank you, Mr. Strauss. That concludes your 3 minutes. Monsieur Caron, for 3 minutes.
Merci, Madame la Présidente.
Thank you, Madam Chair. In Division 22 on the Canada Investment Corporation, it is described how the federal government will be able to keep ownership of the pipeline longer, and I'm just wondering what the objective was to hang on to the TMX pipeline for longer, and what effects would there be to this? Thank you for the question. In order to be more specific, I'll express myself in English.
Of the CDEV Act, I'll call it for short, is it doesn't pertain specifically to the Trans Mountain Corporation. This is more the rationale behind introducing it through the BIA is that CDEV is a enterprise crown corporation that has been in operation for decades now. It was incorporated in 1982, and the fact that it doesn't have its own enabling legislation makes it sort of anomalous with other enterprise crown corporations under the federal government's umbrella, such as, for example, Export Development Canada, Business Development Bank of Canada.
Je vais juste préciser ma question parce que le temps.
I'd like to repeat my question because time is running out. What you're telling me is that it makes no difference at all on the ground. All it is a legislative update for reasons of consistency. Thank you for the question.
The intention is not to change the mandate or operational structure or governance structure of CDEV, but to present a legislative framework for it that currently doesn't exist. CDEV operates under the Canada Business Corporations Act and Part 10 of the Financial Administration Act. So that's the purpose behind this bill.
Il me reste combien de temps, Madame la Présidente?
How much time do I have left? 1 minute. Coming back to the stable coins. I understand that the Bank of Canada will be involved. There will be new rules. This is a new security. I wonder whether Quebec has taken a position on this and whether you've had conversations with the Autorité des marchés financiers in Quebec, which has constitutional jurisdiction over securities in Quebec. So have you spoken with Quebec with regard to this? Well, you can ask them what they think of it, but the framework was developed with the participation of the Finance Department and provincial financial departments, including that of Quebec, and authorities responsible for supervising securities in the provinces, including the Autorité des marchés financiers. What's the AMF? What is that organization you've just referred to? Well, in our consultations with the AMF, they said they felt comfortable with the approach taken. Thank you very much. That includes this round of questions.
For the final 3 minutes. Thank you.
Just need the mic to come on. Thank you, Madam Chair. Question on Division 17, supporting the federal credit union growth. So credit unions are vital to Atlantic Canada. There's a lot of the communities have provincial credit unions. Can you just talk in general terms about how this framework changes in the federal budget is going to help establish federal credit unions at a size that they'll be competitive?
Thank you for the question. These amendments support credit union growth in a number of ways. The first way is through creating a simplified form of amalgamation. So where a federal credit union is buying a very small provincial credit union, so a credit union with 25% or less of its assets, it's a more simplified and efficient process where the federal credit union won't have to go through all of the steps, including seeking membership votes. Another way is through transitional relief. So this framework sets out transitional relief to allow for asset transactions. So right now there's transitional relief that helps an entering provincial credit unions or provincial credit union that's becoming federal to not have to meet all of the federal requirements on day one. And so these changes are adding those transitional relief aspects for an asset transaction as opposed to just an amalgamation. It also clarifies how deposit insurance would apply. So this is the CDIC coverage for deposits, as well as it eases entry for allowing additional market conduct transition. So again, a provincial credit union that's entering into the federal credit union space will have additional time to meet the federal requirements for market conduct.
So is it fair to say it'll give them an ability to compete with the chartered banks?
The intention is to make it to support the growth of a federal credit union and entry into the federal credit union space. And so through that process, they grow and allowed to be more competitive.
And there's nothing in these changes that's going to make it more cumbersome for those credit unions and small communities that want to stay provincial and work under the regulations they're under now?
No, there's nothing in these changes that would do that.
Okay. I'll just shift to another topic.
You have 20 seconds left.
Quick question on Division 37, combating money laundering, proceeds of crime. We're putting more CBSA officers on the ground. is that going to help us target crime at the ports?
Thank you, Mr. McDonald. That concludes the round here. I would really like to thank all of the officials from Finance for joining us today. We appreciate your hard work and your support, and we will be following up on the questions that were not answered for committee members, and we do expect a timely response from the department for committee members. I will ask members, or sorry, not members, but officials, you may be excused. I just have two little pieces of committee business that I would like to discuss with members. So thank you, officials. For members, you have all received a budget for the BIA study, and I would like to have your support. It was sent to you earlier. Do we have unanimous consent to adopt the budget for the study? Excellent, thank you. And then I just wanted to conclude with one thing, because I know there was a little bit of frustration on the part of members today with some of the questions. So based on the motion that we adopted in December, a number of the topics that you have raised have been farmed out to other committees, and so that's why officials were invited from Finance, particularly on the finance aspects of the BIA. That being said, I did want to give members just a little bit of a heads up that we are confirming with the ministers who are coming to Finance times for them to come next week and the following week. So that's the Minister of Transport with the CEO of Alto, the Minister of Veterans Affairs, the Veterans Ombudsperson, the Minister of Finance, as well as the Minister of Heritage. And we are this week going to be receiving notification from the other committees as to whether or not they will be receiving the ministers that we have asked them to based on the motion that was passed on December 10th. If they don't go to those committees, then they will come here. But I, as the chair, will be hearing from them over the next coming days, and we will kind of figure out where we go from there. But I just wanted to give members a heads up that those times are being finalized, and as soon as we know, we will let members know. We may have to adjust some of the committee sitting times depending on the availability of the minister. So with that, do we have consent to adjourn? Thank you. Okay, meeting adjourned.